Hey guys, welcome to this video. I'm just going to cover the US100, okay, the Nasdaq, whatever ticker you want to call it. If you want my free training, it's underneath. Don't forget to grab it. So US100, I've done a few videos on it. You will know if you follow me, I called it short here previously. We've now fallen. Of course, you exited for gains, I hope. And we're now going to look forward at the next future moves. So if you just cast your eyes slightly further back to this high, and that came around December 21, just before we went into 2022. Now, 2022 was the scare year for global economies and brought things down. And to be honest, after looking at this morning's comments, Fed's Bowman, the US policy rate may need to rise. There's a little bit of fear in there. I don't think people are completely honest with themselves when they say that the markets will recover swiftly. You've since had a forming downtrend, similarly, well, almost identical to the S&P course. And if you just look at the top line where you've got your falling market on every push, okay, one there, and then you've got two more here. You can see that it's a sustained down move, okay? Now, I wouldn't be shocked, really, if the same thing occurs again, and therefore it's a place I like the US100 short, okay? Now, remember, you don't always need to hit the trend line exactly. You know, it's not going to be that it's pinpoint every time. Sometimes it's not, okay? But this area I like for shorts nonetheless, because you've had several weeks of up move now already. You can see if you look at your stock oscillator, it's coming right up. Clearly your bias should be starting to look to the short side, or at least in my opinion. So that's where I like it short. Now, the only other thing to note is that if you go on your monthly, you've only had a couple of red candles down before a push up. Now, if you look at the last fall, it was considerably further to the downside before it popped up here. With this, you haven't really had that. So I would take this entry a little bit lighter than normal because the push has come rather quickly off from underneath these lows, more or less in a market maker stop fashion. So nonetheless, my bias is short up here. Anything higher, I'll probably update this post and look for shorts spread out a lot more. I wouldn't be surprised if ultimately you start to trickle down. My bias for US equity markets indices is still to the short side. I think eventually you'll get down here. And I do not think the global economy is recovering at the rate that lots of people think it is. I think we've still got some time to go. If you look at your nearest MAs, your 20 is right up there, but you're quite far off your 40, 100 and 200. So again, it leaves room to the downside. If you're looking at your weekly, if you swap to your monthly, you can see you're well off any of your MAs, which again is extremely significant. And you can see those nearest moving averages actually coincide very well with key levels of price action and rejection, which we can look to use as a means of a market bounce. So ultimately, I don't think this green candle is going to provide too much. If it does go above my predetermined area, it wouldn't shock me entirely if you end up getting short again round here. That's where I would look to DCA lightly. But an entry now I would also take lightly, like I said, in anticipation for a fall. Your monthly as well on your stock oscillator is right up there. I would also look out for comments from the Fed. We've got minutes today, later on, 6 p.m. GMT. Okay, so there's lots of things to keep an eye out. I would say probably the words from the US and the FOMC board are going to be really significant in the very near future, probably in the latter stages of this month as we go through it. It's going to be a lot more important. You've got ECB comments, okay, that may affect things slightly, but mainly I think we're looking at comments from people like the US Treasury Secretary Yellen, okay, who said a few positive things about China, which is probably why you've got a recent rise. And just going forward, just looking at Bostich, Bowman, Yellen, people who are going to talk about risks, which you've had from Fed Bowman, like I said. Risks to outlook include global shocks and treasury markets are functioning, but risk still remains. So they're very aware that there's still risk. I think they're trying to play it down a bit. Nonetheless, my bias is short. Thanks for watching. Get my free training underneath if you want to change your trading today. I'll see you in the next one.